Texas A6 loans versus agency cash out loans. What is the difference? So a Texas A6 is a home equity loan. It's only applicable in Texas. No other state has this. It's called a Texas A6, and that's when a homeowner is tapping of their primary home. A homeowner is tapping their primary home's equity to get cash out. And sometimes that cash out isn't necessarily money in their pocket. Maybe it's used to pay off some credit card debt or to do some other things, right? So it's money that they get access. That makes it an A6 loan. Be sure to check out more details because those are very unique. We'll put links somewhere around here so that you can see more information about the A6 loan. But it's an A6 is a Texas cash out loan. So that compared to the agency cash out loan, like what is an agency cash out? So Fannie Mae and Freddie Mac, they're known as agencies. They're, quasi-government. Heck, there's a lot of agencies, right? Like HUD and all that other stuff. So what an agency cash out loan is, it's when you're combining a first mortgage and a second mortgage, both an existing first and an existing second, and you put them together when that second mortgage was not used to purchase the home. So it's a non-purchase second is what we call it in the mortgage world. So a non-purchase second. So let me give you a scenario. Somebody buys a home. They buy a $500,000 home. They get a $400,000 loan on it. So they got this first mortgage of 400 grand. And maybe a year later, and I don't care if it's a day later after closing, but let's say in my example, a year later, they go get a $50,000 home improvement loan. So not an A6 cash out, but a home improvement loan. Well, then rates get better, time goes by, and they now want to refinance both of these loans, this $400,000 loan, this $50,000 loan, and they want to just combine them and make one loan with the lower interest rate. They totally can do that, but that is an agency cash out. So an agency cash out means, again, a non-purchase second gets combined with a first, and that becomes the agency cash out. And why does it matter? Unfortunately, it matters because your interest rate is going to be higher. I, for one, don't necessarily understand why, and I don't agree with it, but that's just the way it is. So the agency cash outs are just, again, paying off a non-purchase second. So a lot of times these second liens were used for maybe a line of credit, maybe it's a home improvement loan, maybe it was an A6, just a lump sum payment, where there's a pool loan, something like a solar panel or something, but you're paying something off that wasn't used to purchase the home put together. Now, here's one more example. Let's say somebody did buy a home and they got a mortgage both at the same time at closing. They got a $400,000 and a $50,000, and both were done to purchase the home, the 500 grand home. They put down 50 grand for a down payment in this example. So 500 purchase, they put down 10%, and they got one loan for 80% and the second one for 10%. Later on, if they want to refinance and put those together, fine. That's normal. That's not an agency cash out. Let's pretend that for whatever reason, later on that in this same example, they refinance the 400 and they refinance the 50, or they just left the 50. Maybe they only refinance the 400. Let's go ahead and refinance that 52 while we're talking about it. So now they've done this. Well, you can still trace, even though that 50 is a new 50,000 because they refinance it, you can still trace that back to an original purchase money. And that is when they put them together in the future, that is not an agency because you can trace it back that it was money used for the purchase of the home. So I know it's complicated, but just know that if somebody says, hey, you're doing a cash out, even if you're not getting a dime out of the thing, like, how is this a cash out? They call it an agency cash out when you combine that non-purchase second. And that is different than the normal home equity loans like a Texas A6. So if you have questions, because I know it's complicated, if you have questions, feel free to reach out to the Mortgage Mark team. We are here to help answer all your questions. And as always, when you think mortgage, think Mark.